recording. Go for it. You can share.
Sweet. Thanks, Trent. So today I'm going to teach you all about a very simple and a very straightforward strategy to play calls or puts. Again, full disclosure, I said it just a little while back that I don't really use any indicators in my charts, but every now and then reverting back to this RSI2 strategy is not that bad of an idea, especially if you don't feel charting or marking down levels, or having to take a look at the charts and drawing your patterns and all of that. It's very simple and straightforward, so everybody is, or I would say most of y'all are familiar with what the RSI is. Now this is a slight variation on the RSI strategy. So what is RSI basically? This strategy, right? It is referred to as a mean reversion strategy. Now, when stocks are in a constant, like in a uptrend, obviously you have to have a pullback because it's healthy. It's necessary for a pullback to to take place for the stock to eventually then run back up and continue its its uptrend. If you don't have that pullback, eventually what happens is when you experience a massive drop, it's just going to be a disaster. It's just like SPY, for example, right? SPY just kept running up without any healthy pullbacks. And a pullback for any stock or any index is necessary, as I said, because it is required. People have to take their profits, secure that money, and then reinvest back into that if they are interested in. And this is where the 2 period RSI strategy comes into play, because when that corrective action takes place, or when that pullback takes place, you want to take your plays off of that, whether it's whether it's to the upside or whether it's to the downside. In very simple terms, there are just three indicators that are required for this strategy. One is the 200-day SMA. This 200-day SMA basically is an indicator for a long-term trend. It tells you if a stock in the long term, if it's on an uptrend or if it's on a downtrend. So in simple terms, if a stock is trading above the 200-day SMA, you can safely say that it is in an uptrend. And if it's trading below the 200-day SMA, then you can say it's in a long-term downtrend. So that's something that you want to be cognizant of, is what the SMAs mean and what do they actually indicate from a stocks in a perspective. So the first thing you would add is a 200-day SMA. The next thing you would add is a 5-day SMA. This is basically the short-term trend. It indicates to you, or it tells you what those corrective actions are, or what those pullbacks are in in a stock's profile, what it's actually doing on a day-to-day basis. And the third one is a 2-period RSI. Don't be thrown off by a 2-period RSI, because you may be wondering what does it actually mean. It's nothing but the RSI. It's just that the parameters are a little different compared to the defaults that you would pick, let's say in in TOS or E-Trade or some other trading platform. And I'll show you what those parameters are.
Hey, Hirsch, any chance we could mute your Discord notifications? It's kind of hard to hear you because they keep pinging.
Yep, done.
Appreciate it. I'm sure everyone else appreciates it.
Yep. Sorry about that, guys. So now as far as the strategy goes, the entry, right? First thing you want to see is basically what is the trend of the stock currently. Is it in an uptrend or is it in a downtrend? Now that uptrend or downtrend is basically indicated whether the stock is trading above the 200-day SMA or whether the stock is trading below the 200-day SMA. So if the stock is trading above, that would be a position for calls. And if the stock is trading below the 200-day SMA, then you want to look at that for puts. Then the next thing that you want to see is an ideal call position or an ideal long position takes place in these following scenarios. the price needs to be trading above the 200-day SMA. It closes below the 5-day SMA, and your RSI is between 0 and 10. What this looks like from a chart standpoint is like this. This red line over here, this indicates my 200-day SMA. Okay, because it's long, so I marked it as red. It's the long-term trend. Then you have this green line, which is the 5-day SMA. This is your short-term trend indicating, the short-term corrective activity. So you see, it is running up constantly, but you have certain pullbacks.
Are you trying to show TOS?
Yes.
Oh, you're still sharing the PowerPoint.
All right. So you see this 200-day,
There we go.
This red line, this is the 200-day SMA that I was talking about. And this green line over here, this indicates your 5-day SMA. So you see this particular stock, Facebook, is in a long-term uptrend. It's constantly going up. It was at 200 like in a couple of months back. Now it's sitting somewhere around 300. So it's constantly in an uptrend, but it's also having its pullbacks. It comes back, it goes up, it comes back, it goes up. And this 5-day SMA is what we're going to leverage to be able to identify that corrective activity and then enter long positions. So now, what is the ideal short position? Same thing. This time, the price needs to be trending below the 200-day SMA. The price closes above the 5-day SMA, and your RSI is between 990 and 100, which in your, in terms of your charts, this is what it looks like. This is oversold at the bottom, 0 to 10. And 90 to 100, the top is basically overbought, and then eventually you would sell at this particular place. So these are the things that you want to to keep in mind and time your entries for this particular strategy. I'm going to share exactly what the settings and the parameters are, and that's like this. So once you take your position, the key is when you enter a long position, when the stock closes below the 5-day SMA, you will want to close that call position or that long position once the stock closes above the 5-day SMA. That's basically your move. Same thing with a put position or a short position. You will enter that when the price on a particular day, it closes above the 5-day SMA, and then after a day or two, when it closes below the 5-day SMA, that's when you want to exit your put positions, because at that point you are basically in profits. And don't get worried or don't get overwhelmed by what it actually means from a charting standpoint. I'll show you exactly what that looks like. So if you want to take a screenshot of this, go ahead. These are the settings for the RSI. Normally, all you would do is you would just add your RSI indicator to your charts, and you would just change the parameters 2, 70, 10, and keep it at that. And on the bottom right, you see this is what it looks like. You see the light blue right at the bottom where it touches that yellow line. That's where you would time entries for a call, because it's it's oversold. And then you see the red marking on top. That's where you would time your entries for a put. But these are the settings you basically need. The length needs to be 2. Overbought and oversold, everything else would be 70, 10, and close, wilders, and no. Those are the defaults when you bring up your RSI. Now, how do you identify which stocks would fit the criteria? Here you go. Take another screenshot. This is basically TOS. TOS is my primary trading platform. So I've made it simple for you guys. I have a RSI to scan. So if you just have to add this to your TOS charts, you can basically run this every day, and it'll it'll come up and it'll tell you okay, this stock, it's trading above the 200-day SMA. It's trading close to below the 5-day SMA, and the RSI is close to somewhere between 0 and 10 for you to enter your call positions. So mark it down, and I'll post it on Zoom chat, or I'll post it on my channel too, this particular scan. So you can run the scan every day. You could run it on a daily basis, and take your calls or puts based off of the scan and what shows up in that. Examples. Now, Facebook. All right. Let's say you run your RSI2 scan for Facebook and you're looking at Facebook calls. You see this green arrow over here. All right. That, okay, it's marked as green only because number one, the stock is closing right below the green line, which is the 5-day SMA. So you would run the scan, let's say around 3 p.m. or 3:30 p.m. close to market close. Let's just say 3:30 p.m. Eastern time, about 30 minutes prior to market close, and you get a bunch of tickers. You see something familiar, you see a stock that you've traded a lot, and you come up and you bring it up on the chart, you take a look at it and you see where it's actually is it closing below the 5-day SMA or not. Once you do that, you also have to look at the bottom, the RSI indicator. You look at the green line, the green arrow, which is at the bottom of the RSI. You absolutely want to make sure that the RSI is somewhere between 0 and 10. And that is indicated by that light blue line, which will show up. So as long as those two are met, that's one of your criteria to enter a call position. And you want to make sure that the stock is trending long term above this red line, which is your 200-day SMA. So look at what Facebook did. The entry was at 247.01 on that particular day. It met all the criteria, closing below the 5-day SMA. The RSI is below the yellow line, which is 0 to 10, and it's trending above the 200-day SMA. So you enter a long position, let's say a 250 call. Now you wait for a day or two. Okay, 2 days later, now see that the very next candle, which is a hammer, it doesn't really cross above the 5-day SMA. So you would still continue to you would still continue to hold it. But the following day, Facebook opens up at 257 and then it does a sell-off. So you've already secured a $10 move on Facebook in a matter of 2 days. So if you had to take, let's say, the 250 call for a week out or 2 weeks out or so, within 2 days you've made a $10 move on Facebook, which again I don't even want to tell you how much that translates in terms of contract price. So it's as simple as that. As long as it's closing below the 5-day SMA, immediately as soon as it crosses and closes above the 5-day SMA, or if it opens up above the 5-day SMA, get out of there, secure your gains. Now let's look at another entry 5 days later. You see, you might come and say okay, wait a second, Facebook today it's closing below the 5-day SMA and it's trading above the 200-day SMA, I should get in. No, that's why I've marked it with the red arrow, because look at what the RSI is. The RSI is not below the yellow line. It's not between 0 and 10. So that would not be an entry for you to take take a position into this. A few days later, when you look on the right, the green line, you see Facebook closed below the 5-day SMA, probably somewhere around 261.71, and the RSI also perfectly fits the criteria. Enter a long position, and then next day you see same thing, closes opens up at 269 and it closes above the 5-day SMA, which is I think around 260 6 or so. That would be your your exit. Pretty simple, pretty straightforward. There's nothing to it. As long as you match the three criteria: above the 200, closes below the 5-day SMA, and the RSI at the bottom, it is it is in the oversold area. Another example, same thing. If you're going in for a short position, now look at this. This is PG, right? Now this strategy, as I said, can be used for calls or it can be used for puts. In this case, PG over here is trading below the 200-day SMA, which means it's in a long-term downtrend. And you have the same settings. You have the 5-day SMA. In this particular case, you want the stock to close above the 5-day SMA in order to enter a put position. So you see this green line over here, it enters entry level is 129 62. You enter one particular day. But this arrow is wrong, it should actually be green. But see, this line over here, it is in the like in the overbought like the position, which is like above 90 or above 70. So as long as this is red and the RSI criteria like matches, you can safely take this. Same thing, you run the scan towards like close of like an hour or 30 minutes prior to market close. You find the different stocks, you pick something that actually looks interesting to you, and as long as it's closing above the 5-day SMA, buy a put position. And then you wait for like you wait for 2 days. Once you see like the next day, it didn't really close, even though it went below the 5-day SMA, it didn't really close like below it. But then you see the following day, the exit at 127 like oh 06, a good like $1.50 to $2 move on PG within like within a day. So as long as it closed below that 5-day SMA, that's your cue to like that's your cue to get out. So it like I said, very simple, very like very straightforward in order to get into like get into these things. Same thing, another example over here, just marking what your entry and exit might be based on the 200 and the 500-day SMA. Now, not to say that there may not be fake outs on this, and that's why you want to like monitor and position just like any other strategy. This is not 100%. Like the this I would say is a good 80 to about 90% like success rate, as long as you're able to manage your positions and as long as you're able to maintain good stop losses. So like a fake out, or not a fake out, but one of the times where the strategy would not have worked is, let's say over here, you see it's trading like it's trading below the 200-day SMA. The RSI is basically at the bottom of the level, and it closes at about 120.05 below the 5-day SMA. And then you wait for it, and eventually it closes up above the 5-day SMA. That's your cue really to like to get out. But it closed at 119. You would have taken a loss. About a buck on PG would translate close to about like I think 22 on the actual like contract itself. So you would have taken a loss or a minor loss on this, depending upon what your stop loss is. But if you had the patience, and if you said like what, I could like hold it out, if you have like enough time, as long as it closed above the SMA, maybe you would hold it till the RSI goes into the overbought position, which happened the very following day. So this guy ran up and it's close to like 123, 124, and you could have sold at that. So it's more of managing like your positions once it reaches this particular level. Because if your contracts are cheap and if you have enough time on that, you could give it a day or two for it to continue its uptrend, because like it's trading above that 200-day SMA if you were in calls. So let me show it to you like what it looks like on the actual TOS chart itself, just like I showed before. You see, simple, absolutely like simple. Pick any particular like in a day over here. Let's just say like the Facebook. You see, here's your 5-day SMA. Around over here, the RSI like matches, it's closing below this line. This light blue indicates that this closed like over here. So you made your entry at about like 230 or so, close to around their market close, let's say 231. And then the following day it opened up at about 235, and like then it started reversing. So even if you ended at about 231 and it opened up at 235, most traders who are like who are basically risk tolerant of their portfolio would have cut it over here as soon as they were up, like based on the volatility when market opened. But this is something you want to be very careful of also, because like you absolutely have to make sure that the criteria is matched. Like the RSI is at the levels where like where you want it, where it is below 0 and 10. See another like another good entry over here. It closed at about like 267. All you had to do is 267 this particular day. You bought a contract for, let's say, 270, waited for like 2 days later. 2 days later Facebook closed at about 277. So that's like a $10 move in a matter of like 10 days. So it's that simple. As far as like the scan goes, as I said, I'll post it in my signals channel, as well as I'll post it in Zoom chat, so that you'll have that, and you'll can like you'll can find your tickers based on it. And I'll also send you like what the presentation. I'll send you the a screenshot of what the parameters need to be, just in case if you guys did not capture that. I can, tell you what the parameters you need for the RSI, as well as the two indicators that you need on this. Again, I trade primarily based on like price action, but every now and then it's like it's not a bad idea to just not want to like do anything of that sort, and just quickly come scan, find a ticker, and take your place just off of that. It's just simple. Like it's there's really nothing that you need to do. And once you enter a position, you just have to monitor it and watch it, so that once it closes above, you take your gains, you walk away, call it like call it a night. And yeah, that's pretty much what I had. I'm open to questions. Anybody have questions? I'm monitoring the chat. I see Nilma. Nilma, how does this work for a day trade? Similar approach. And well, no, RSI2 is more of for a swing. So even if you swing it for, let's say, like in a 2-3 days, that should be like in a good enough. Not really for a day trade. It's more of for swings. You see, the thing with this market is, right, swinging in this market is crazy. Stocks, one day they are up, one day they are down, next day they are up, next day like they are down. This sort of like gives you a bit of a confirmation, as also a comfort level, in terms of like once you're matching up the criteria, and you're absolutely making sure that the 5, the 200, and the RSIs are matched up. You can take a position and let it ride, as long as the stock is in a long term, like in an uptrend. But no, I would not recommend this for a day trade. um Jack, you want to add me on Discord? Yeah, absolutely. Anything for like to help you guys out, for sure. Can you use this strategy on smaller time frames for day trades? No, Varun, you cannot use this on smaller time frames. You have to use this only on the daily time frame. You have to watch for the stock to close below the 5-day SMA, and then take a swing position for for at least, I would say, at least the next week, or maybe a month out. If the stock is inexpensive and the contracts are not that bad, you can always swing it for for a few days. So even if you buy a contract like a month out or so, it wouldn't be that bad of an idea. It all depends upon how big your account is, what your risk tolerance is, and what you can what you can afford. Would this be a swing? Yes, it is a swing. We can only see. Okay, I think I've answered the questions. If you know it's going to close below, do you buy them end of the day? Yes, Varun. You would as long as the criteria is match for RSI2, and it's at the end of the day, if it's closing the below the 5-day SMA, you can take a position. As I said, you just have to make sure you match the criteria, to what I said for the RSI2, and then you would enter close to market close, like 3:45 or 3:50 p.m., just before market close, is when you would you would enter. But just as with options, buy a little bit of time, right? So you're giving the ticker the time for it to make its move. Do you close out the position the minute the next day opens to take full profit? Well, Jackie, there are multiple ways of being able to close out, right? So the RSI2, as long as the stock closes above the 5-day SMA, or below the 5-day SMA, depending on whether you're in calls or puts, you can basically close it out. So let's say, just like Facebook, you buy it, and you buy a contract, and the next day it's running up and you are in a call. Wait for it, let the stock do its thing, let the ticker make its move. And then you realize that, okay, Facebook for the entire day keeps running up. By close of business day, you see Facebook is closing above the 5-day SMA. Secure your profits. There is no harm in securing profits, even if it means it's only 10%, or even if it means it's only 20%. There is nothing wrong. Now what happens is, let's say, the same thing with Facebook, you entered at 267, Facebook opens at 277. Why wouldn't you want to secure? Because yeah, Facebook could potentially run up to 280, 290, but then you've already opened up $10 above. That is a sure shot guarantee that the market is giving you money. Close it out, take it. There's nothing wrong, there's nothing wrong with that. I've said this before on Zoom. Somebody comes up to your door and gives you $1,000, no strings attached. Are you going to take it, Or are you going to give it back and say, no, I don't want $1,000. I want like 5,000. Give me 5,000 right now. That's the thing which you have to be cognizant about. Will it work with other SMAs besides 5? Nope. It has to be the 5, it has to be the 200, and it has to be the RSI 2. Any other questions, guys? Or is good? So as I said, I'll send out the settings and I'll send out the parameters, and you can you can add it to your charts. Pretty simple like in a strategy. Nothing like nothing really to it. Thank you, Omri.
All right,
Thank you.
Hirsch, great lesson. Thank you.
Sure.